Here's how it works. Essentially the most anal and safest way to safely buy into a third wave, but you need to have confidence that 1. The first was a real first wave. 2. The wave 2 retraces near 618 in an ABC A equals C zigzag formation. 3. You don't buy 618, maybe 786, but definitely 100 as detailed. If you feel the market is about to swell early in the morning, 618 entry is okay, but if it's wishy-washy in that area, try 786 where I usually buy, or be safe by actually getting into the full breakout. Third waves form because wave 2 is like a slingshot. It's pulled way back to try to break the low of wave 1, but when it doesn't and is weak, the smart bears cover and the greedy bears run for the hills. It gets congested in the area and panic covering kicks off the 3. Like magic, it works 80% of the time since I perfected it. This November 2013, my profit accuracy has been 100%, and many of my third wave calls, zigzag bottom calls, which seemed nuts at the time, actually became true. You are now seeing my January 29th, 03 to February 28th, 03 Miracle Rambus trades, along with my early entry into the former penny stock that was a Chinese internet stock sensation, Sohu. The massive 7 to 17 spike that occurred in a matter of days in Rambus is the main reason why this tiny account rocketed from $2,540 to $5,998 in this 1 month period. It wasn't one lucky company got acquired triple. There were 21 skillfully made trades that one of my members, Cal Career, described as one of the most brilliantly executed series of trades I've ever seen. I'm surprised Ted hasn't come out to bow. What happened was this 1-2-3 pattern break setup that I was tweaking in 2002 became lethal. I mean, very lethal. You can't see it on this chart, but Rambus formed this pattern 5 to 7 times in this 5-day period, and each time hit the button on every 0.786 break. The spike was definitely tradable. You just had to wait for the wave 2 and 0.786 pattern break repeatedly until it was milked dry. I also made a strong AMAT trade during this period and discovered the Chinese internet stocks before they were all about to rocket exponentially until the end of 2003. Here's the criteria. 1. The first wave is simply 1, 2, 3, 4, 5, with the 3 being 1.618, 4 at 0.382, and 5 the typical of the 3 target Fibonacci moves. 2. The second wave must be a zigzag where the A wave is equal to the C wave and the upward B travels 0.618 of the downward A. 3. The breakout into the wave 3 that would follow would need to retrace at least 0.786 of the entire downward zigzag. 4. Based on the momentum alone, I would decide to make an entry at either 0.618 retracement, 0.786, or 1.00 retracement. It's usually one of those 3. 5. Place a stop a hair above the 0.786 level to buy, and whammo. Good profit, large profit, or very, very large profit. I've made some pretty amazing calls since 2009. To be honest, it's not actually a secret, but people need me and my 1 in a million vision and artistic view of charts. It's supposed to be a science, but to master Elliott Wave, you need to have the creative eyes of a master artist, as well as the precision of a surgeon. By the way, my dad is a doctor, and 5 of my mom's sisters and brothers are all doctors. I happen to be the most artistic of my entire family. I've written 17 songs, practically mastered guitar by age 18, and I sold works of art for up to $560 a piece on eBay. I don't plan on focusing on art and music to make money, but it could be a big factor with my life in the near future. This is one reason why people subscribe in droves. Also, They need me to fully validate their Elliott wave counts because they do not have the confidence, like I have, to go through with their trades. This is the greatest benefit of my website, and this formula is how many of my subscribers have made high percentage gains over the years. Knowing that I can validate what they're seeing in real time in the chat room or on video or audio is a very powerful tool in their trading arsenal. On February 22nd, 2009, major market bottom call Elliott Wave DJI video on YouTube and the bottom call ending diagonal video a week later, I stated the following important points to be able to spot this bottom. Here they are in a list. 1. The Dow was near the precise 0.608 retracement level of the entire move from the low of 74 to the peak of 07, essentially calling the lows of 74 to 2007 wave 1 of wave 3. The crash wave had a 5-wave down appearance of a full corrective wave 2. Back-to-back bubbles in a row, crashes, and finally the Dow gave in and retraced the complete move. 2. We got an upper 2 that was 618 of wave 1, which fits the criteria of that pattern into a downward crash 3. 3. After the crash 3, the key wave pattern was a 382 and an upward 4 before a 5 down. This is very important, like I said, and with 10-day swing trades, I use this exact subject to buy as low as possible. People love to buy low and sell high. This pattern has benefited a lot of traders on my website since 2009. The fifth wave was either wave 1 equals wave 5, truncation, 618 times wave 1 plus wave 3, or any of those three with an ending diagonal. As most people know, I've made some sick midterm bottom calls by spotting this rare and elusive formation. When the ending diagonal occurs at the lowest of the low in a fifth wave, combined with Fibonacci, there's an extremely powerful reversal. This is the Elliott wave forecast for February 27th, 2009. This scenario right here for the S&P is an alternate scenario to my video of the bottom call that was posted a couple days ago. This is an alternate scenario. This is the ending diagonal scenario for the S&P, which is a possibility and looks pretty nice right now because the formation is almost perfect. Anyway, this would be an A wave down. This would be a B wave, and this would be a C wave. A C wave would drop to exactly 740, which it did in the S&P. If this plays out, there's a possibility that S&P hits 740 and rallies to as high as 810. And after rallying to 810, it would drop to as low as 675 or 650 in an E wave. That'd be A, B, C, D ending diagonal. This would be A, this would be B, this would be C. There would be a D to 810 and then an E to 650. That's a pretty good scenario because this chart is playing out the way it's supposed to. For the Dow, the alternate scenario would be for the fifth wave down. This would be an A wave ending diagonal. This would be C wave down, and it would touch 7100 and rally to as high as 7750, and drop an E wave down to as low as 6500 to 6700. That's the alternate scenario for the Dow. For the Nasdaq, it would be A wave, B wave, C wave, rally to as high as 1500, and drop an E wave to test 1300. That's the alternate scenario for an ending diagonal, and it could actually play out. But if there's a rally in the next couple of days that rallies significantly, at least like 400 points in the Dow. Look at this. If there's a rally to as high as 7750 in the coming days, that would be a possible ending diagonal scenario. It all started when the first big speculative bubble popped, from 280-ish to the print low of 50. I called a big zigzag bottom at 40 to 45 correctly, but little did I know that it would go from 50 to 280 to 1240. This is the actual chart from April 2013. The Bitcoin crash has occurred on this pattern, A wave was 270 to 105, retracing a perfect B wave to 205. 207 was 0.618, and now in a C or 3. A C wave would target 40 to 45 in a bottom, or it was like a tool bubble mania chart, 10 cents. LOL. I was chatting with some friends on Facebook, and the Bitcoin bubble TechCrunch.com article popped up. I was casually curious about the chart and that headline. When I saw the live chart, my jaw dropped, like really dropped. Seeing Bitcoin go from 274, crash to 50, and rocket to frickin' 274 is pretty astonishing. I had little to no idea that this happened. The chart was showing my favorite Elliott wave pattern of all time. Wave 1, Wave 2, 0.76 break of Wave 1 and Wave 3 equals 1.618 setup on a long-term chart. By chance, I was witnessing the 1.00 breakout at the perfect time. The formula pointed to a move from 274 to 500, and I was really excited to see this. Here's what I said in this chart. Zooming into the Bitcoin chart, there's a 3 of 3 appearance. If 1.618, target 377, right at the sweet spot. So later that night, I posted this chart. Upon the 274 breakout move, I saw within the pattern another 1-2-3 setup and third wave breakout move. Initial target before 490 to 500 I saw was 377 and a 1.618 wave 3. Here's the Elliott wave forecast for January 26, 2012, and which happens to be my birthday. So tomorrow I will be turning 36 years old. And I've been doing this for about 12 to 14 years. Started trading around 1998. And yeah, so I've seen everything. Anyway, I'll be doing this is an update on the long-term forecast of the Dow, Nasdaq, and S&P, as well as the NDX. And last time I had a long-term forecast, we just broke above 2720, and we're setting up for a third wave, and we got that. But on the long-term chart, it looks pretty clearly defined, at least to me. We got wave 1, wave 2, wave 3, wave 4, wave 5, and the corrective wave, or the crash wave, on the European crisis was a wave 2 and 5 waves, or 1, 2, 3, 4, 5. Or it could be A, B, C, depending on where the A ended up bottoming and where the B wave and the C wave ended up bottoming. But the C wave ended up dropping to 2298 on the Nasdaq, and then it was a small zigzag, and it looks like a perfect wave 2. So we got 5 waves up: 1, 2, 3, 4, 5, wave 2. And if you've been following my site for the past 10 years that I've been doing this, actually it's 11 years now. Yeah, I started GemXWave.com in 2001. I've been doing this for a long time, for about 11 years now. So I have a lot of experience. And from my experience, from my past 11-year experience, every time you get wave 1, wave 2, and wave 3 pattern break, it sets up a third wave. And I've been right 85% of the time when I call a third wave pattern break. So if you see me calling a third wave and you're short, be careful, because the third waves happen so frequently that it's just a no-brainer to me that this is a third wave setup. But anyway, 5 waves up, zigzag wave 2, and then we're breaking above. We're within 60 points, I believe, of NASDAQ taking out the 52-week high of 2887. And if we take that out, it'll be wave 1, wave 2, wave 3. If we take out 2887 on the NASDAQ, the highest target I have would be as high as, I believe, 4900. That'd be wave 1, wave 2 times 1.618. Tack on the 1.618 times wave 1 onto the bottom of the wave 2, and you get the target of 4900 in the third wave. So this is wave 1, wave 2, wave 3, and we actually have the pure third wave setups. And the NDX actually recently just took it out. And yeah, NDX took it out. Wow. Took it out convincingly. And there's no doubt about it that we took it out. 2440 was approximately I believe it's 2440 was the 52-week high previously. We took that out by about 25 points. And NDX setting up for 1, 2, 3, and Ty's target half of that is 4,300. For S&P, this looks like wave 1, wave 2, wave 3, wave 4, wave 5, wave 2, and in a small zigzag with a short C wave. ABC and a short C wave. And this looks like a cup and handle type of move. It looks like got the cup, and then we're setting up for the breakout into a third wave. If this is wave 1, wave 2, wave 3, which is the pure third wave setup, which happens to form 85% of the time, whatever I call it, just be warned. 85% of the time. High target high from the S&P, this is wave 1, wave 2, wave 3 pattern break is 2215, which means that we're going to take out the all-time highs in the S&P shortly. When you have a January like this, which is so rare, when you have a big January like this, you start out the year like this, and people are convinced that we end up for the rest of the year in a third wave, or in a long extended bull market. And I believe this could be a very long third wave. And 2215 is something you can't. 2215 is a pure third wave setup if it's 1.618 times wave 1, and that's just a standard move. And if you take the percentage gain, which is a double, then you tack on 1.618 to that, the highest target would be about 3,200. So 1.618 would be 2215, and 1.618 times the percentage gain of wave 1 would be about 3,200. So those are the two targets I have. These are just conservative targets. I'm not even kidding. Anyway, for the Dow, the chart looks extremely bullish. I mean, this is the most bullish formation you can get, and we haven't even broken out yet, and we're just on the verge of doing it. The Dow is within 120 points of breaking above 12,876, and if you take that out, which will probably happen in the next week or two, probably the next week, we wave 1, wave 2, wave 3. If you take out 12,876, the highest target I have for the Dow would be 20,715. But if you take the percentage gain times 1.618 and tack it on to the bottom of the wave 2, highest target I have would be about 30,000. Around 30,000. Wave 1, wave 2, wave 3. So the first conservative third wave target, would be 20,715. I know it's hard to believe that, but this chart is just so bullish. It's not even funny. It's extremely bullish. This is the pattern break that I every 85% of the time I see this pattern break or this pattern develop. The third wave develops and it comes and extends to the full third wave target. And if you have the chance, just look at on my website. There's a link on the top of the page which shows the PDFs. And look at my third wave calls in the past 3 years on the wave counts that do for 40 stocks or 20 to 40 stocks. I've done it a long time. I'm probably going to do it shortly. I'm probably in the middle of the year. Actually, I should probably do it in the next week. I usually do long-term counts for the top 20 stocks that I like. And I was right 85% of the time, approximately, for the third waves. I wasn't right that it went up. I was right that it hit the targets, which is almost unheard of. Like, for example, Baidu was around 700, like, pre-split. And then I said it was going to go to 1,700, I think. I don't know. I don't remember, but you have to take a look at my history for calling third waves. These are PDF files that were uploaded onto my old website on the date, and there's no BS on those PDF files. So you have to look at those carefully, because every time I see wave 1, wave 2, wave 3 like this exact pattern, wave 1, wave 2, wave 3, the third wave 85% of the time develops. I'm talking hits my targets. And again, this chart,
the Dow, S&P, Nasdaq, NDX is so bullish. It's not even funny. And again, the highest target I have for the Dow is conservatively about 20,000, 21,000, and 1.618 times the percentage gain would be about 32,000, 30 to 32,000. I know it sounds like a joke to you if you're. I know majority of Elliotticians are extremely bearish and they won't believe this stuff. But you have to believe it when it comes from my mouth because I've been doing this for 11 years, and every time I do this, I call third waves like this, they develop. And there's a reason why I'm making a lot of money on my website because I'm right a lot, and my trades are like 80% of the time I make profit on my trades, and 85% of my third wave calls develop. And it's been going on for 11 years, and I mean I'm still kind of a secret to the trading community, but I'm pretty damn sure that to the higher ups they know about me, so they don't ignore me when I call third waves. But the general public, they still haven't grasped the wave genius yet. They will when the third wave happens. But again, let me go back to the charts again. Dow wave 1, wave 2, wave 3 will be highest is 32,000. Conservative would be 21,000. For S&P, I mean we're just right on the verge of breaking out, guys. Wave 1, wave 2, wave 3. Conservative target for S&P would be 2215, and 1.618 times percentage gain would be at 3200. And for Nasdaq, conservative target would be 4900. Yeah, wave 1, wave 2, wave 3 would be 4900, but the times percentage gain, which is about a triple from here. Let's see, about 6,000. Just go look at your old Elliott wave principle book and look at the bullish third waves, and there's a chapter about percentage gains times 1.618, and it's basically third waves can travel 1.618 times the percentage gain, and that's typically what happens. And that chapter is rarely visited. No one really reads that chapter because the bears tend to read the most bearish chapters of the book, and they ignore the bullish chapters. Anyway, I'll be doing a long-term update like once a month, like this. So just look out for the breakouts because they're gonna happen in the next week, and then it could be a melt up for about 15 years. That's a wrap.